Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Raines here with Zacks top stock picks of the week. Today I'm looking at Halliburton, which trades on the ticker HAL. Halliburton is an oil field services standout that works throughout the entire life cycle of a project. Halliburton's products and offerings help oil and gas companies with everything from exploration and well construction all the way to abandonment activities. Halliburton, like many others in the wider oil and energy sector, has benefited from soaring prices in 2022. The Russian invasion of Ukraine has hampered global oil and gas supplies, forcing many countries and companies to reevaluate the status quo. And more exploration and drilling projects are underway in a newfound race towards greater energy independence. Plus, it's clear that oil and gas will play a massive role in the economy for years to come, even as alternative energy gains steam. Halliburton's Q3 adjusted earnings more than doubled year over year to beat Zacks estimates, and CEO Jeff Miller believes, quote, structural demand for more oil and gas supply will provide strong tailwinds for his firm. Zacks estimates call for its revenue to climb 33% in 2022 to boost its adjusted earnings by 94%. It's then expected to follow up this growth with 17% stronger sales in 2023 and another 41% higher earnings in 2023 as well. Halliburton's outlook showcases growth and stability, with many of its oil and energy sector peers projected to post year-over-year declines in 2023. Halliburton's upward earnings revisions help it land a Zacks rank #1 strong buy at the moment. Plus, its industry ranks in the top 8% of over 250 Zacks industries, and its dividend yield is about 1.3% at the moment. The stock has soared about 60% in 2022, which includes a big fall and a nearly as large of comeback. Halliburton's average Zacks price target also offers a whopping 25% upside from Tuesday's levels, and it trades at about a 25% discount to its industry at 12.7 times forward 12-month earnings. This also marks about a 20% discount to its own 5-year median. Plus, 11 of the 14 brokerage recommendations that Zacks has are strong buys, alongside 2 buys and just 1 hold. So all in, Halliburton is a relatively low-priced stock trading for under $40 a share, and is a great way to play the larger oil and gas industry that's going to continue to play a really impressive role in the economy for decades to come. So that does it for me. Now I'm going to send it over to Brian Hayes.
Thank you, Ben. My top stock pick this week is Plexus Corporation, ticker symbol PLXS. Plexus provides electronic manufacturing services globally. The company offers design and development, supply chain, new product introduction, and manufacturing solutions. PLXS delivers its services to companies in a host of industries, including healthcare and life sciences, industrial, aerospace, and communications. In its fiscal fourth quarter, Plexus won 32 manufacturing contracts that are worth a combined $214 million in annualized revenues. The company's expansion into several secular growth markets and massive backlog bode well for the foreseeable future. In addition to its continuation of new program ramps, Plexus has been streamlining its manufacturing facilities in order to optimize its operations. That's a bit about the company's background and services. Let's shift gears a bit and look at this stock's rankings and industry group. Taking somewhat of a top-down approach here, Plexus is part of the Zacks Electronics Manufacturing Services industry group, which ranks in the top 2% out of more than 250 industries. Because this group is ranked in the top half of all Zacks ranked industries, we expect it to outperform the market over the next 3 to 6 months. Historical research studies suggest that approximately half of a stock's price appreciation is due to its industry grouping. In fact, the top 50% of Zacks ranked industries outperforms the bottom 50% by a factor of more than 2 to 1. By focusing on leading stocks within the top industries, we can dramatically improve our stock picking success. Check out how this industry has outperformed the S&P this year, and particularly in the latter half of the year. Also note the favorable metrics for this industry group below. The industry is displaying relative undervaluation along with above average projected and historical EPS growth. Moving on to our snapshot page here, Plexus is a Zacks ranked #1 strong buy and has recently broken out to the upside in a bullish move that is pushing the stock to new 52-week highs. Simply put, there aren't many stocks making fresh yearly highs right now. The price movement is a sign of strength. Plexus has built up an impressive earnings history, surpassing earnings estimates in 3 of the past 4 quarters, with a 17.52% average beat over this time frame. Last month, the electronic manufacturer reported fiscal Q4 EPS of $1.78 a share, a 39.06% surprise over the $1.28 consensus estimate. Revenues of $1.12 billion also exceeded projections by over 11%. So they've been consistently beating earnings estimates, and the stock price is reflecting this. Analysts are bullish on the stock and have been raising earnings estimates across the board. The fiscal Q1 consensus EPS estimate has been revised upward by 14.84% to $1.47 a share. If the company is able to achieve this, it would translate to growth of over 67% relative to the same quarter last year. And looking further ahead, estimates for the current fiscal year appear favorable. The 2023 Zacks consensus EPS estimate now stands at $5.98 a share, translating to potential growth of 21.5% relative to the previous fiscal year. So it's clear that growth trends for PLXS remain promising. So Plexus Corporation, ticker symbol PLXS, is my top stock pick of the week. Make sure you subscribe to get all of our top stock picks. We bring them to you here each and every week on Zacks.com. From Ben and I and everyone here at Zacks, thank you for watching. Tune in next week for more of our top stock picks.